record button now. Okay, so the topic of this morning is called best practice bookkeeping. Now, the reason why I wanted to sort of share some tips and that sort of thing for business owners, and even we've got some bookkeepers online as well, is just sort of stressing the importance of up-to-date numbers and best practices when it comes to bookkeeping. Now, I think this has just been, it's always been a thing, right? Like we've always needed great numbers and great insight, but it's just been reinforced where we have something like COVID-19 hit us, and all of a sudden we need to make so many business decisions in such a short amount of time. And if we don't have this stuff up to date or correct, then we could be literally making the wrong decisions. And so this morning, we're going to run through a few things that we recommend and some options that you might be able to implement in your business and in your bookkeeping to help make that better. I want to introduce Allison. So Allison is the founder and director of Efficiency Partners. They're a bookkeeping firm actually based on the Sunshine Coast in Maroochydore. The purpose is to bring efficiency, clarity, and focus back to your business. Clients of Efficiency Partners range from cafes to medical practices to manufacturers. They're an interesting kettle of fish. I think we might have one of them on the call today, and construction firms as well. And also, the goal is to empower business owners with the financial support they need to maximize profit and productivity. So thanks again for joining us, Allison. And I might also mention that Allison actually does our own bookkeeping. So I think mid last year, Inspire moved our bookkeeping over to Efficiency Partners. And the reason for that was because, one of the reasons, there was multiple, but one of those reasons was because, you know how they say the plumber's tap is always leaky. So I was responsible for our own bookkeeping. And it got done as and when needed. And it was just, disorganized. And I can say that we've never had more clear numbers than we have at the moment. So just want to thank Allison and Renee, who's the team member who looks after us.
Thank you.
Mm-hmm. And I've got some sort of things to run through here of why up-to-date numbers are so important. And I was kind of doing this morning, and as I was putting it together, there's kind of like two categories of reasons why bookkeeping is critical. And I kind of do that as almost like a carrot and a stick. There's reasons why people are going to chase these numbers, and that's like the stick. Like, hey, get it done, hurry up. And then there's a carrot. There's actually positives in terms of getting your bookkeeping up to date and done in a really good manner. But I might start with the sort of negative or the chasey stuff first. The first one is a temporary thing for many businesses, and hopefully JobKeeper's not going to be around because COVID's not going to be around and the financial impacts of that for long. But we've seen that you need to be reporting your JobKeeper related GST turnovers by the 7th of each month, and also getting your payroll like really, really crisp because you're reporting that every pay run to the ATO. So there's one reason why, if you're eligible for JobKeeper, you need to stay on top of this stuff, at least from a payroll perspective on that one. The next one there is preparing the BAS. And so, most of the people joining our clients of Inspire, and, when it's BAS time, it's either monthly or quarterly, depending on your lodgement cycle. We'll start nagging you a couple of days after the month starts to, hey, tell us your bookkeeping's done. Is it up to date? And that's us coming and chasing you. And, there's some people who already have it done by the 1st or the 2nd of the month, and there's some that don't get it done by the due date of the BAS. So don't be like them. And then the last one there is getting your tax done annually. Now the worst thing is when you do your bookkeeping, the worst thing is rushing it to these deadlines, because often you'll get things wrong, or especially if you do it yourself. Do what you do well and outsource this sort of stuff. I've finally done that myself, and yes, I can do bookkeeping, but it's so nice not having to worry about it and getting someone else to do it on sort of regular timing. Let me let me know in the chat box if you've got any comments on the sticks. And Alison, do you have anything to say there?
Yeah, I think the key is to be really proactive with your bookkeeping, because like you said, Ben, if you rush it and you're a really last minute person, things will get missed, mistakes will be made, and you could even miss the deadline. So it is really crucial to be up to date and have accurate sort of financials at all times. I mean, and even in terms of getting your tax done annually, you really should be able to have your financials up to date, so you can do some tax planning around this time of the year, April, May. And if you don't do that, then you could miss out on potential deductions and areas where you can save money. So
absolutely, or if we'll overestimate or underestimate your tax bill.
Yeah, absolutely.
Yeah. And I'm just keeping an eye on the chat box. And Sammy, I'm about 10 meters away from a coffee machine. So I think you're a few hundred kilometers away though. So if I made a long black for you, I think it'd be cold. But thanks for joining. And yeah, some of the positives. Let's have a look at that. So some things I thought up that are actually really, really good, and I do these things, is making informed business decisions. And again, we've never had a time where we've needed to make decisions of expenses, suppliers, from a customer's perspective, cash flow, our team, all this sort of stuff in like record time, because of the financial implications that COVID's thrown at us in a matter of days, weeks, and months. So that's huge. The other thing as well, depending on the size of your business and if you've got a management team, up-to-date numbers and getting reports out actually keeps your management team up to date. Like, how's the business actually tracking from a sales perspective and an expense perspective? Tracking your own profitability. Like, are you earning enough to warrant the effort that you're putting in and the cash flow and all the risks that you put in as a business owner? And then the other thing as well is reviewing expenses. So at the end of each month, we recommend you have a budget inside Xero, and you can just run a quick report to show you what your budgeted numbers are versus what you've actually received in sales and spent on expenses as well. So you can easily see where you're over or under budget on those sort of things. Did you have any other sort of, nice things that are keeping your books up to date, Alison?
Yeah, I think the biggest thing about being able to make informed business decisions is if you're looking at junk numbers, if it's kind of like a junk in, junk out situation. So if your numbers aren't accurate, then you're going to be making decisions on bad data. So you're going to end up with a poor result, essentially. So having them accurate and up to date at all times is really imperative. It's imperative for you to make decisions for your business and where to track your numbers. So in terms of, you might be overspending in certain areas, you might be paying too much in wages compared to your sales. If you don't have accurate and up-to-date numbers, and you can't assess those things, you can't change what you don't know. So super important to have them accurate and up-to-date at all times. And for finance reasons too, if you want to go and get lending for a new home or an investment property or a new machine for your business, you need to be able to make sure that you've got the numbers to match the investment or the financial requirements to that. Yeah,
absolutely. That's a very good point. Yeah, and often, often if people are going for finance, we get sometimes we've been hassling them for three or 4 months, 6 months to get their stuff in, and it's just this huge rush to try to get it done. So,
and they haven't even assessed whether or not they can afford what they're doing.
Yeah,
because they haven't had the numbers to be able to sort of back up their decision-making process.
Yeah, that's it. Very good. Alrighty. Well, here's another good question. So, how often should your numbers be updated? Do you sort of have any, because I've got some notes here, but do you have any sort of guides for business owners? Because I guess, we'd have a variety of people joining today. People who sort of operate their business on their own, or they might have a small team, or it might be a bigger business where you've got a full-on management team, people want sort of daily numbers and that sort of thing. So, what are your sort of general guides to business owners in terms of how often they should do their bookkeeping?
We like to recommend that the bookkeeping is done weekly. Depending on the size of the business, like you just said, you might be able to stretch it out to fortnightly if you're a smaller business, but certainly weekly makes you, ensures that you're on top of things. In terms of your invoicing out, at a minimum, that should be weekly. The longer you take to invoice your clients, the longer it takes to get you money, and there's a flow-on effect to all of that. So definitely weekly for the bigger businesses, some daily depending. The smaller type businesses, sole trader, fortnightly or monthly at the very, very maximum. If you take it longer than monthly, then you're trying to think back about what happened 6 weeks ago or even 4 weeks ago. And, if there's an issue that's been going on for that long, it kind of mounts up in terms of money. So definitely we recommend our clients weekly or fortnightly at a minimum.
Wonderful. And, that allows you to run monthly reports, and like in Xero, it does really good monthly management reports that you can sort of run. After the bookkeeping's done, I usually sort of scan through them before, finalising them. Sometimes there's little tweaks, or we could have paid 2 months worth of something in 1 month, so it looks odd. So little tweaks like that might be needed here or there, but then it gives you a really, really good position of your business performance. And then the other thing that...
Sorry, Ben, just to interrupt there. I think it's really important that business owners understand the difference between your cash and accruals as well. A lot of smaller businesses just process on a cash basis, which means you're just processing straight from your bank rec as and when the money's spent and received, rather than raising invoices and raising bills in the system. So, if you're going to look at a cash basis P&L, you're not going to really get a good indication of what's happened that month in your business. You might have sales that are aligned into a completely separate COGS. So it really is important to process on an accruals basis, and to be able to monitor those. At month end, you can then assess how your business has gone, and you can match it to your budget, and you can see how you're tracking on your goals and your plans for the business, and if you need to tweak them.
Yeah. And can I say, just from personal experience, like Renee, who looks after our bookkeeping, has been awesome at that. For instance, there's a lot of subscriptions or things that we might pay annually in advance or quarterly in advance. And so you'll see nothing for a couple of months, and then this huge expense if you're doing cash basis bookkeeping. Having her go back and actually do the accruals and actually seeing per month what's the actual per month cost of that subscription gives a much truer view of the profitability of the business. So
yeah, absolutely. And I think it's really important that you set up your chart of accounts too, so that when you're reading them, you can actually see exactly where your money has come from and where it's gone to. So a lot of people, especially those that are doing their bookkeeping themselves, they kind of lump expenses into office expenses or subscriptions. And as you just mentioned, subscriptions is one of those things that little amounts can come through your bank account on a regular basis, and little amounts all add up. So it's important to fan out your chart of accounts so you can exactly see where your money's coming from and where it's going to, and that your COGS are aligning to your income streams, so you can see sort of your gross profit on your different income streams.
Yeah, fantastic. That's great. And then a couple of timing mistakes to avoid. You can see that one of them might annoy me, but when your accountant nags you for the BAS for the tax, that's not when you should start bookkeeping. You should be doing it proactively and on a bit of a set schedule. Renee's booked us in for, I think, every Thursday morning she does ours. We've got clients who book in their bookkeeper, even if it's monthly, at least it's, the first week of the month, that sort of thing. So you need to get regular with this stuff to make sure that it's not just one big catch up, or, when it gets over 100 unreconciled items in Xero, that's not when you start. So,
it's about creating the habit of doing it and knowing when you're going to do it and how you're going to do it, who's going to do it. And I think when you create the habit of doing it on a set day every week, or having your bookkeeper do it on a set day every week, it's like anything. It's like a financial goal. You take a habit of transferring money into your provisions account and putting away for your tax and things like that. So bookkeeping is also one of those things that you need to create a habit of doing it on a set day and a set basis.
Yeah, absolutely. No, thank you. Alrighty. Now, I think the next slide, we're actually talking about the software stack. Now, what I want to sort of talk to is the most common or the most popular at the moment set of software or that you see business owners should be using for their bookkeeping and their accounting. Now, obviously, I think we're both big fans of Xero, but would you be able to sort of tell us more about what's happened with this thing called Hubdock over the last couple of months and their relationship with Xero?
Yeah, so Xero have actually brought out Hubdock, and that's sort of happened over the last few months. And as at the end of March, Hubdock is actually included in the Xero subscription. The amounts of the Xero subscription have gone up by $2 a month, and Hubdock's now included in that subscription on certain plans, none of the cash book plans, but more the business plans.
Yeah. And what are the features of Hubdock, and what does it allow you or the business owner to do?
Yeah, so Hubdock is pretty much a software that scans your invoice and automatically populates the field to bring the Xero invoice into Xero. And for example, if it was accounting fees, it would automatically be coding to accounting fees if that's how you have set up Hubdock. There's always expenses in a business that will go to the same general ledger account every time the invoice comes in. So you can set up Hubdock to automatically bring that invoice into Xero and have it approved and sitting in your system waiting. Super important that when you're setting up Hubdock that you're also setting up in Xero the terms of trade for your suppliers, so that when you're looking at what's due, you can actually see correct due dates. It also pulls in bank statements and other financial institutions. And for really large companies, they do have an agreement with some suppliers such as BP and other large institutions that bring their supplier invoices directly into Hubdock for you. So it can certainly take away a lot of the data entry. It doesn't eliminate it altogether, but it certainly does take away a lot of it. And it looks like Hubdock's in the process of replacing Receipt Bank. A lot of clients still use Receipt Bank, and Receipt Bank is a very good software. However, if you're going to compare the two, they're pretty much of a muchness, and Hubdock's now included, so it's a bit of a no-brainer in terms of costing.
Yeah, like I noticed myself, like we'd used Receipt Bank for probably 5 or 6 years, and then given Hubdock was essentially thrown in with Xero in terms of the subscription costs, and your firm actually prefers using Hubdock, then we just switched to that. And from my perspective, all we did is needed to change the email address we sent our invoices to. And I don't think I've even taken photos of stuff through an app. I just forward it through. Even if I take a photo of the physical receipt on my phone, I can just email that through to the email address anyway. So, from a functionality perspective, from my perspective, nothing's changed. Obviously, that on the back end or in the software, it's different. And my opinion of Receipt Bank versus Hubdock is Receipt Bank seems a lot better in their user interface and how it looks. But in terms of functionality, my guess is they're much of a similar sort of package.
Yeah, definitely much of a muchness. And if you're a business owner that's got an specific accounts email address, which is what we recommend for our clients, just so invoices don't get missed and things like that. If you've got a specific account's email address, you can set up rules in there that automatically, as soon as you get an email with an invoice attached, it automatically gets forwarded to the Hubdock email address. So you can really eliminate some of the human need, I guess, which is obviously a time saver.
Yeah, fantastic. I've got a couple of other sort of points on the software side of things. And the first one is, let's look at the sales side. So Hubdock is great for the expenses, but from a sales perspective, we use a relatively industry-specific software called Practice Ignition for our invoicing and our proposals.
Yeah.
But different clients use different things. From my perspective, you do want to reduce the data entry and the duplication if you can. And so what I've seen personally is a lot of the proposal software or the sales software, even thinking of Go Proposal, Proposify, I don't know about PandaDocs, but there's a whole heap of other quoting and proposal software. Even Xero has internal quoting that you can link up through things like Zapier, or some of them would have native integrations with Xero as well, so that as soon as a client accepts a proposal, bang, there's the invoice straight in Xero. So even speaking from our own perspective, we don't even touch invoicing ourselves. It's all set up automatically. Even when our clients accept the proposal, the direct debit's already automatically set up through Practice Ignition. And Practice Ignition, oh my goodness, it even reconciles the payments once they come into the bank. It's amazing. So from a sales perspective, our bookkeeping side of things is 96-97% of it is all automated, which is fantastic. Have you seen any other examples that work really well with Xero?
There are a multitude of APIs out there and add-ons, which is what Xero call them. It really depends on what industry you're in and what you require. The trick with bookkeeping is to streamline it as much as you possibly can and automate as much as you possibly can. And there are definitely a lot of apps out there that can do that. You just need to be aware when you are integrating Xero with another software, then they're made by two different developers. So they don't always love each other, even though they say they do. So we find a lot of the time, especially the softwares that are inventory based, a lot of the integration doesn't work that great. So it might work perfectly for your invoicing and your sales, etc. But sometimes it's not worth the integration because of the errors that come up because the developers are not the same. So yeah, definitely a lot of APIs out there. My recommendation would be to do your research first, speak to people who have used it, and actually get your bookkeeper involved to ensure that the integration, that they actually will love each other.
Yeah, wonderful. No, that's really good recommendations. And then the next one I want to sort of ask you about is, as I draw horns on Xero, some people don't like Xero, or their business is not, and if Xero saw me do that, yeah, don't take me out of context. But there's some businesses that, there's a manufacturing client that we work with who can't use Xero because he's got so much volume of transactions. So he's stuck on MyOb. Whether he'd call it stuck on MyOb or not, that's another question. But let's say you are using MyOb. What is, or there's Sage, or there's QuickBooks, or other stuff. Maybe we'll keep it to one. Like if you're using MyOb, the Premier version, even if you're on a desktop, what are some other options to help with the automation, like Hubdock, given it's not cloud-based?
Yeah, you can use, there is sort of scanning software that you can use. You can set up repeating invoices and things like that. MyOb actually is a far better system to use if you have inventory, and majority of times these days people are actually in the cloud. So there are a lot of obviously integrations that go into, usually if they go into Xero, they're going to go into MyOb as well. because they're in competition with each other. So, you know, and if you are a big business, a lot of manufacturing businesses, you know, the software that they're using is fully integrated in terms of different modules. So they don't usually have too many add-ons when you've got big business, because the software that they need to use will have all the different modules that you need to use. But certainly if you're a business that does have inventory and a large inventory, MyOb is, as a standalone product, MyOb is definitely better.
Yeah, no, fantastic. And yeah, like that client in particular is, you know, considered moving from MyOb a few times, but you know, they've got different warehouses, tons of different stock, and it just, yeah, it'll it'll crush.
They would have to get an add-on product, and then you've got the love each other situation of integration. And you can still do manual journals to bring the transactions in, but it's not ideal.
Yeah, no, definitely. Alrighty, and if anyone's got questions about apps that work together or anything like that, please pop them in the chat box. There is some time at the end for Q&A, but if anything's popped up through that, just let us know. Now, the next one I've sort of given a guide on, and feel free to take maybe a screenshot of this if you're keen for a bit of a checklist of stuff to do. But the question I wanted to answer is, how often should you review your numbers? Now, this is assuming that your numbers are up to date, they're being done regularly, and done well or done right. So this is a bit of a guide of actually what we can use to run our businesses. So the first one is a monthly cycle. So monthly things to do are review your actual versus your budget. Again, set up right in Xero. This is a very easy process. So there's a bit of setup in terms of getting your budget in there. But you know, at the end of a month, the first or the second or the third of the month, you run a report, bang, you've got it in seconds. It's really, really good. You know, there's a little of a, in terms of what that might show you, it might show you that you need to tweak your expenses, or check on there's adjust your sales target. So if you're spending a bit more than you thought you would, you need sales to compensate for that shortfall. You know, making sure your profit's on track as well. And also another one that's often overlooked or missed is actually looking at your balance sheet. Now, efficiency partners make a point of making sure your balance sheet is also reconciled. You know, and your profit and loss, in terms of like an accounting perspective, your profit and loss tells half the story. So it tells what your sales are and what your expenses are, but it doesn't tell you who's paid you or not. It doesn't tell you what you owe in tax or to your suppliers or things like that. So you do need to make sure that your balance sheet looks healthy, and you know, your debt's not building up, or you're not consistently late with supply payments and things like that. So
you can't read the two together, Ben. You can't just read one without the other. You really do need to read the balance sheet and your P&L together. And then another thing that really should be done monthly is to monitor your costs as a percentage of your income. So normally you would expect your operating expenses to kind of go along. They're usually your fixed expenses. And your COGS, you would want to see kind of, normally they would go up in line with your income. So if you're not reviewing that, then you know, you really should be, because you can't track whether you're on budget or on track, even if you're not reviewing your expenses as in conjunction with your income.
Definitely. That's it. And so if we then shift to quarterly, what to do quarterly. Now, this is my personal perspective. So we reset and roll forward our budgets every quarter and then review how each month is going. But so each quarter is that time to review the whole quarter that you've just finished. And I do this even before the next quarter starts. And you need to adjust or do any tweaks that are necessary for the following 3 months or 4 months, depending on how often you do your quarters or your trimesters in a year. So that's an important thing. Now, that actually gives us our sales target for the next 4 months as well. So we base the sales target as a business off the expenses needed and the profit desired and things like that. And that gives us a weekly amount that we need to aim for as a business. And that's what we share internally with our team. And if we hit that number each week, we know that everything is on track. So that's a massive peace of mind. And maybe in another webinar, I'll actually go through the process of calculating that and getting the team on board with that, because it's, we've shared that at masterclasses and workshops and things like that. But when we've seen clients actually do that, it just brings massive clarity to themselves and their team on what success looks like in their business.
And a budget, Ben, is not a set in stone document. It's not a set and forget. You do it once and then you don't review it to the end of the year. It's a rolling document. So things change, i.e. COVID, and you've got to adjust your business to suit. So a budget's not a set in stone document. It's not a do once and then forget it. It is like what Ben said. It's something that you need to continually review, update, and check. And I think the other thing that you really should do, just on the monthly, just back up there for a minute, you really should be having a cash flow forecast, a 12-week rolling cash flow forecast. Without that, you really cannot foresee any icebergs that are going to come up in the weeks or months ahead. And you're kind of too late by the time you hit the iceberg. The cash flow situation is there. So you really do need to be doing a rolling cash flow 12 weeks so you can foresee any issues that you're going to have, and you can take relevant action at that point to avoid them.
Yeah, fantastic. That's good. And then the other thing we want to make sure we do quarterly is, get your BAS done, make sure you've got your money in the tax account to pay your tax bill, ideally in full. At the moment, the ATO is very understanding if your business has been affected by COVID, that we can pause payments or at least stretch them out. If you do need that, then please reach out to us as usual and just ask the accountant who looks after you to get that payment plan or that deferral in place. But ideally, we want to be just hitting these tax bills in full just to get them out of the way. Now,
we like to encourage our clients, Ben, to provision for things like that. So your superannuation, your DIY, your super, your income tax, GST, all those things need to be provisioned. You should have a separate bank account for those. And every time you do a pay run, the PAYG and the super should be transferred into another bank account, so that when it comes time to pay your BAS, you're not in a oh my gosh, where's the cash situation.
Yeah, fantastic. That's it. And no worries, Hugo. Thanks for the note. Hope you've enjoyed it. And you can catch the last section of the webinar on the recording. I'm sorry, I'm just checking the chat box. There's a few messages coming through. Oh, perfect. Awesome. Alrighty. And the last point on this slide here is actually, I want to discourage people from thinking annually. So we prepare annual financial statements and tax returns for our clients, but in my opinion, if you're relying on them to make decisions on your business, it's already too late. So they're already, the data in them is at least 12 months old by the time we run the report. Even if we do it in July, you've got July last year is when the time frame started for that. So much has changed, especially at the moment. So we need to stop thinking that we need to wait till the annual financials are done to make decisions, and because it's already too late. On the other hand, those financials are very handy for the bank, because the bank needs it for funding if you're going to buy property, invest in property, or you need lending and that sort of thing. And the tax man needs it for tax. But if we can just keep in mind that primarily that's what those documents are for. To run your business, you need to be reading your monthly profit and loss statements, your balance sheets, your cash flow forecasts, and making sure things are on track there. Don't wait to each year's annual financials. Alrighty. Now, what I wanted to do is just run through some war stories, Alison. Like I'm sure you've seen plenty of these. We have too. And I guess, if you're a business and you haven't sort of seen some of these and you don't have the best bookkeeping practices in place, then you might not know these until something bad happens. And there's even a few that are coming to mind as I talk that aren't even on here, like, you know, bookkeepers stealing money. Like that's a horrible situation, and fraud and stuff like that. That's really bad. But maybe we can sort of go through a couple of these things. And you know, the first one is, you know, I see all the time, like if you don't code your GST right on transactions, one or two things that happen. You're either overclaiming GST, and that's essentially illegal, or you're underclaiming it, and you're not getting your tax back that you're due. So that's a huge one where, you know, and these are all either clients who DIY their bookkeeping, or that they're not having the best of bookkeepers, whether it's internal or the outsourced bookkeepers they're using aren't, you know, really going through this stuff. And
I think it's safe to say that if you get it wrong, or if your bookkeeper gets it wrong, it's going to cost you money somewhere, whether that be missing out on GST, or even claiming GST where you're not meant to, or it might cost you more in tax or accounting fees, or you know, if you get it wrong, it's going to cost money somewhere.
Yeah, like, you know, we've had clients where we need to basically redo their whole bookkeeping because it's, you know, done so poorly. You know, we get lodgement delays or penalties, nagging from the accountants. Transactions coded to the wrong account, so that's going to hurt you when you're trying to make business decisions, and you're not getting accurate information. Or balance sheet transactions that are coded to the profit and loss statement, or vice versa. Again, this is going to overstate or understate your profit, and this is super common. Like, you know, the amount of times I've seen where you process payroll through Xero, that puts it on the profit and loss already, and then you go and allocate your payment of payroll to the wages account, and you're basically doubling what your payroll expense looks like. You know, that's a very common one that we often see, and so your profit's going to look shocking. Yeah. We've seen things like double paying suppliers if the payments aren't getting reconciled correctly, or in the inverse, you're following up clients who've actually paid their bill because of your lag in reconciling your money received, or having a huge debtors balance because you're not following up your debtors at all. And yeah, like, this is probably more towards the manufacturers or the people who make things and sell actual physical products, but where your stock is all out of whack.
Well, the problem with having your stock out of whack is that if you're making large purchases of materials, or like raw materials, and then you're just leaving them on your profit and loss rather than on your balance sheet on your stock, then you're not reading your right financials either. So that is really, really common. And the whole double paying suppliers is also very common. People pay them, and then they also enter them through the bills section. So there ends up being a double payment there. When we take over a client, we do what's called a cleanse. And that's the nicest word I could come up with to basically say we're fixing up your really ordinary file. And during that process, we have actually found thousands and thousands of dollars for clients who have missed claiming things. Specifically when they buy assets, a lot of the time they forget to put the asset actually in the system. And so there's thousands of dollars there that they've missed out on GST. So yeah, it is important that you get it right.
That's it. And the other biggie I sort of see, and you know, myself included, is DIY bookkeeping. So the problem there's kind of two problems. One's the skill set. Like, are you actually a trained bookkeeper or accountant? In most cases, probably not. Otherwise, you're probably not going to be listening on this webinar. You'll be doing your own accounting, and we wouldn't need to look after you. But the second problem with that is the opportunity cost. So you know, we had a doctor who could earn easily $120 an hour seeing clients, and bookkeeping done well, like, the hourly rate is definitely less than that. You know, I guess it depends on the bookkeeping firm, but
I think they're saving money by doing it themselves, and unfortunately that is not the case. 90% of the time that's not the case. You're actually costing yourself money in multiple areas.
And see, that's if you're doing it correctly. But we look at this from a skill set perspective. It's actually quite detailed, and if you stuff something up, then not only are you losing the hourly opportunity cost, it's you're probably costing yourself in tax, GST, or accounting fees, all that stuff we just spoke about.
Yeah.
The other thing, or the next thing I wanted to run through, is basically like, if you're someone who hasn't got this stuff sorted, or it's average, or you're just unhappy with it, what are actually some ways that efficiency partners can work? Now, I've actually put this slide together because actually you work with quite a few of our clients, and you look after our stuff as well. So I've kind of put this from my understanding of what you can help with, but having a chat with Allison before the webinar, this is a massively sliding scale, and it depends on the business. Every package that efficiency partners put together is customized depending on what you want. Did you just kind of want to talk us through on the lighter end, kind of what the offering is, and then on the heavy end, what's almost like an in-house accountant or in-house bookkeeper, and how that works?
Yeah, sure. So for the basic bookkeeping, I mean, before I say this, our services are actually customized to our clients' needs. So we can do as little or as much as the client needs. At the end of the day, the client sometimes has a perception that someone else can't do their invoicing, or someone else can't chase their debtors, or someone else can't physically pay their bills through the bank account. That's all incorrect. And that's what we find when we first take on clients. They didn't actually know that as a bookkeeper you can do that. So we certainly can do that. And on the basic end of the scale, that would be a client who wants or requires a monthly bank rec, minimal sort of transactions going through, very small business, and sort of doesn't need much help or assistance along the way, and is probably not registered for GST either. Majority of our clients probably do fit into the medium-sized space, and that is kind of your fortnightly reconciliations, your processing through Hubdock or Receipt Bank of your supplier invoices, reconciling bank accounts, loan accounts, inter-entity loan accounts. So some clients have multiple businesses who transfer money from here and there. Payroll processing. Payroll processing is a pretty specific one, and it really does depend on how many team members you have, how often you run your payroll, and it incorporates a lot of things. So your STP compliance, your processing of your super payments, and reconciling at year end, things like that. The other thing is your monthly reporting. So all of our clients at a minimum will always get their P&Ls and their balance sheets, and a percentage of costs P&L as well, so you can manage that. Also like to encourage our clients to have a budget as well. The higher end of the scale is pretty much we are your in-house accounts team. So we have clients that we receive all their mail, we monitor their accounts email, we answer their accounts telephone. We basically are like their in-house bookkeepers. And that works very, very well. We do have quite a few clients in that space, and it just takes away that stress, I guess, because they know that it's being looked after. And sometimes when you've got an external outsourced sort of bookkeeper looking after things, you do get a different response from suppliers, and you do get a different response from your debtors. And you know that things are being done consistently and accurately. So just something that the business owner doesn't have to think about.
And just on that was a massive load taken off my shoulders. Renee, the person who looks after us, actually answers and replies to suppliers and that sort of thing from our accounts@inspireco.com email address. Like it's fantastic, and you wouldn't even know that we call it outsourcing our bookkeeping. So it's absolutely fantastic.
Yeah, we wear a lot of different uniforms.
Sorry, I just muted myself for a sec, but yeah, like, yeah, I guess this is a bit more, in terms of like weekly bookkeeping, you'd probably expect from this sort of package, supplier payments, coordination, payroll, super payments. Yeah, again, the amount of headspace you get back as a business owner if you're looking after this stuff is immense. So,
Yeah.
and the other thing is, people also look at hiring an internal accountant depending on the size of the business. But let's say you're going to hire someone 3, 4, 5 days a week. Like, your expense will easily add up for a good person in that role. So that's where I think you need to consider what you get from an outsourced bookkeeping firm like Efficiency Partners, where you might pay $1,000, $2,000 a month for really good service and up to date, which actually saves you hiring a person internally. So I think if we sort of consider that, and so just on that as well, I think as business owners we know how much easier it is to contract services than employ, and the things that go along with every person you've got on the payroll, so to speak.
Yeah, and I think too with big business, sometimes you think you need things take a lot longer than they actually do. So, if you're going to give someone 5 days to do a specific job, then 9 times out of 10 they're going to take that 5 days to do it. If you've got an outsourced company looking after it, then you know that they're going to do it as efficiently as they possibly can. And, it's going to save you money in the long run because you're not going to have sort of the in-house costs of hiring a team and sometimes the brain damage that goes with hiring a team too.
That's it. Alrighty. Well, well, I think that brings us to the end of the webinar. Thank you for running us through, I guess, your expertise and your view on bookkeeping. I hope that's helped the people who've joined. We're going to hang around for a few minutes if there's any other questions that you've got. We're basically on tap if you need it. And any clients who, like, you might already be working with Efficiency Partners or considering doing it, Inspire no longer offers bookkeeping ourselves. We had for quite a long time, but we found that we're really not set up to provide a full offering like Efficiency Partners does. We're offering a very, very basic service compared to what you can get through Efficiency Partners, and just the timing and all that sort of stuff. So I've got a question from Karen. She's asked about the cleanse, and the question she's asked is, how far back do you go with the cleanse?
I think the longest we've got, the furthest we've gone back, Karen, is 7 years. That would indicate that the client hasn't done tax returns for 7 years. So normally we can go as far back as the last tax return you've lodged, unless you think that there's errors in that year. We can then go back and do that. So there's no real set time period. It's really what you need.
Yeah, fantastic. That's good. So basically, if you've got concerns, we can go back as far as you need to. Now, another question that's come through from Mark, and thanks for the webinar. Any tips, any bookkeeping tips for businesses that use a credit card to pay for expenses? So I'm one of these people. I like the old frequent flyer points. So did you want to sort of take us through that, Alison?
My biggest tip with the credit card is to ensure that what you are spending on your credit card is in line with your cash flow. So credit cards are a trap if you are not someone who is able to only spend what your cash flow permits. Ideally, you want to pay out your credit card every month. So what you spend, you need to have the money to pay that back every month when the credit card comes in. I would also recommend that, on your credit card, you're buying a lot of things that are point of sale. So have the app on your phone, take a photo of your receipt and send it in straight away. You can then get rid of it. We find that a lot of people end up getting their credit card statement at the end of the month and not having receipts for things and not knowing what things are. So just take a quick photo of your receipt, send it into Xero or even Hubdock. But be careful not to overspend on your credit card. Spend what it is you can afford.
Yeah, wonderful. And I've got a little bit of an annoying thing with, so I've got a Commonwealth Bank credit card, and it's a personal one. So they don't feed in automatically to Xero. So it is a manual process for me to go and download the transactions for the last, because it's weekly bookkeeping for the last week, and upload them into Xero. That's a bit of a pain, but apart from that.
Another thing is to keep your personal transactions out of your business. We see it all the time, and we really encourage our clients to not take willy-nilly spendings out of their bank account, because it adds up really, really quick. And you've got to have a bookkeeper, or yourself, if you're doing your own bookkeeping, account for those transactions, which can be time-consuming and costly. So if you're one of those willy-nilly spenders from the business bank account, I would recommend that you change that process and take a set drawing or a set wage, whatever your accountant advises on that.
Yeah, wonderful. That's I'm sure you've seen some interesting things on bank feeds.
Yeah, we do a lot of personal tracking as well of the income and expenses on a personal level.
Yep.
We use the cash books to do that, cash books, Xero cash books. And I remember saying to a lady one day, have you got any idea how much money that you're sort of spending? And I told her, and she actually nearly fell off her chair.
Geez.
Unbelievable amount of money gets spent when you're just doing willy-nilly spendings.
There you go. Alrighty. Well, yeah, my encouragement to anyone who's keen to talk more to Allison about this stuff is to contact her on the email address there. Otherwise, check in with your accountant and Inspire to ask for a personal introduction. We've actually done warm introductions for our clients as well. We can give efficiency partners a bit of detail about what's in your Xero file and that sort of thing. So if it's something of interest, then please reach out and we'll get that sorted. Also, efficiency partners can do basically a quote or a fixed price proposal for you, and there's no obligation to use them. But what I'd recommend is, if this is an area that might be frustrating for you or annoying, just go and get an idea of what the pricing could be. And again, they can do customized pricing or options. So what if you give them everything except for payroll, or what if payroll's included? Work through, because if you get this stuff off your hands, that's going to free you up to actually be able to invest more in your business in strategic ways, or even, as we said, in the case of that doctor, going and earning money instead of trying to save less than you'd earn otherwise. So,
yeah. And you just don't know what you don't know.
Yeah, absolutely. All right. Well, thank you very much for joining me, Allison. I'm sure this is going to sort of live live in our Facebook group for clients. I think even, Allison, you're a member of that Facebook group.
I am, yes.
Yeah. So if there's any other questions, we'll tag Allison in to answer them. But yeah, I appreciate your time this morning, and I'm sure the people viewing do as well. Thank you.
Thank you for having me.
No worries. We'll talk to you soon.
Okay. See you.
Thanks.